What's going on, my fellow wealth creators? Matty Ice here. In this video, I want to talk about the difference between taking policy loans from a dividend-paying whole life insurance policy versus using an insurance line of credit or a cash value line of credit. They're called different things depending on the bank that you utilize, but generally they're pretty much the same thing. And here's the thing. One is not necessarily better than another, but we do want to understand how both of them work because there's some specific factors involved between the two that will help us determine which one is going to be best for us for our specific financial goals right now. And at the end of the day, to truly accelerate the wealth building process in our lives. Because if in this specific environment right now, if using an insurance line of credit is better and it's going to maybe getting better interest rates or whatever, then that's what we want to utilize. And that's actually why I wanted to make this video too, because I'm actually shifting from using policy loans directly from my policy here to getting and establishing an insurance line of credit right now, specifically because of interest rates. And actually, I'm just going to go ahead and share my screen here because I have a little slide deck just to keep us on point because there's some specific parts of each one of these that I want to cover. So like I said, both are good. Which one we use depends on a couple of things, at least for me. There's two main things, and that's interest rates and speed. All right, let's talk about interest rates first. And actually, what I want to do is pull up my policy first, and then we'll go through a side-by-side comparison here. So I want to show you guys my annual statement for my first year owning my custom designed dividend paying whole life insurance policy. It's been absolutely phenomenal. I'm going to link down below to the training that I'm doing, just sharing my first year owning my policy, how I used it, etc. These things are just absolutely fantastic when you set them up and use them properly, guys. What I really want to show you though is this right here. And you can see, here it is. All right, here's my name. This is my policy. This is my annual statement. Here's when I set up the policy. It's with Lafayette. They're absolutely fantastic. They've been around for 120 years now, I think, and have never missed a dividend payment. And my dividend was actually higher than my original illustration, not by much. But I set up the policy when the dividend was 5.2%. They increased it to 5.3%, which is why it's a little bit higher. And they just increased it again to 5.75%. So I'm anticipating for next year to get a dividend even higher than what my second year was supposed to be. Anyways, what I want to bring your attention to is this right here, though. The loan interest rate for the upcoming policy year is 7%. This is why we need to pay attention to this kind of stuff, guys, because if I didn't actually go through my annual statement and read the whole thing, I wouldn't have known this, and I wouldn't be making the move that I am right now. So when I saw this, that was a cause for concern for me. Not the end of the world necessarily, but it means that I need to make a shift here because I have a better option. See, in my first year, in my first policy year, my policy loan rate was 5.5%. That's really good right now. So I was taking policy loans for pretty much everything that I needed. I just made a video going through the 4 real life examples and use cases that I've implemented in my first year with these policies. You can check that out down below. But one of them was doing a private money deal where I borrowed from my policy at 5.5%. I lent it out at 12%. You would normally do points with that as well. And I keep the spread. And it's a really, really good way of accelerating the wealth building process. But the fact that it's going from 5.5% to 7%, okay, well, now I need to see if I have other options. All right, number one. Number two, this is also why it's important, in my opinion anyways, because I have 2 policies. I set up my first policy with Lafayette, my second policy with One America. One of the benefits of One America over Lafayette in this scenario is that when interest rates go up, policy loan rates go up, they'll never go up more than 0.5% or 50 basis points in any one given year. So my policy loan rate is going to be much better on my One America policy right now than with Lafayette. So that's why, you really want to make sure you're comparing different mutually owned life insurance companies. One's not necessarily better than another, but these are things to be aware of, right? So what I'll likely do is still take policy loans from my One America policy, but I can now get a line of credit on my Lafayette policy, which is going to be, I just had a conversation with the lady the other day. It's going to be 6.25% on the line of credit. And that's locked in for, I can't remember how many months. Was it 18 months? I don't remember. But anyways, that's 75 basis points lower than taking a policy loan from my Lafayette policy. Right? So why wouldn't I do that? Right? I'm saving 75 basis points. And I have outstanding policy loans right here, as you can see. This would be automatically paid off if I opened up the line of credit, but this is going to be paid off in 5 days anyways, because this is primarily from doing my private money deal. All right. But that is one of the main reasons that I'm going to be opening up an insurance line of credit using basically the available cash value in my policy. I'm going to get with a line of credit with this specific bank. If you want to, if you're interested in getting a line of credit for your policy, oops, what am I doing here? There we go. And you're not sure what bank to go to. You know what's interesting? I called a decent amount of big banks, called Wells Fargo, Regions, and like they didn't even really know what I was talking about when I asked them, like, hey, can I open up an insurance line of credit using the cash value for my whole life policies? They're like, I don't know if we do that. So, but this specific bank is very familiar with it. They do it all the time. They've been doing it for a few years now. I will drop a link in the description below if you want more information about that. But interest rate is one of the big reasons that I am shifting from the policy loan over to the insurance line of credit. Here's the other thing, speed. So one of the, I wouldn't even necessarily call this a drawback or anything bad. It's just, again, something to be aware of. With policy loans, it typically takes 2 to 3 business days for that money to show up in your account. Not a huge deal. I'm okay with that. You just got to plan things accordingly. All right. But with an insurance line of credit, you get instant access because that's how a line of credit works. You usually get checks, a debit card, all that stuff. It's just like having a checking account. It's just collateralized by your cash value, or the amount that you're able to spend is determined by the amount of cash value that you have in your whole life policy. All right. So that can definitely be a major benefit depending on how you're utilizing the policy in your life. Where this can really be a benefit is if you are trying to implement some kind of accelerated debt payoff strategy, like velocity banking, for example. An insurance line of credit can work really, really good for that. A little bit better than waiting 2 to 3 business days for those policy loans to come through. So that's something to take into consideration. Now, with policy loans, you usually have a lower interest rate just based on the research I've done so far. But as you can see, that's not always the case. And that's why it's really important to pay attention and weigh the different options so that you can make the best decision for you. If we can save 75 basis points on our interest rate, why would we not do that? And all we have to do is shift it over to a line of credit for the insurance line of credit. Yeah, I mean, I'm okay with that. With insurance lines of credit, usually a higher interest rate, but it just depends on the interest rate environment, guys. So that's why it's important to pay attention to this stuff. Now, one of the other benefits, though, of the policy loan is that there's no application or qualification process. With a cash value line of credit, there is still an application process. They are going to check your credit score, not necessarily to deny the line of credit because it's collateralized. So every bank's going to be a little bit different, but with the bank that I'm using, they check the credit score for or for the purpose of determining how much cash value you'll be able to access with the line of credit. With I think it was a 650 or higher. Was it 650? I think it was 650 or higher. You get access to 100% of the available cash value in your policy. Anything lower than that, you would get like 90 to 95%, I think it was. So still access to most of your cash value. But that is something to be aware of when accessing the money, is there is an application process with these lines of credit. Now, once you're approved, then you're pretty much good to go. But that's just something to be aware of. And then with the policy loan, what I've noticed too is that there's a slower payoff, or there's at least more of an active process for paying off the policy loan. Technically, when you make a payment against the policy loan, right, that's usually available immediately for borrowing again if you needed to, showing up in cash value again. It doesn't always happen in the online dashboard. So I've made payments before, and then it takes a few days for that payment to reflect in my cash value again. Actually, sometimes it's taken over a week, and I have to call the company and say, hey, I made a policy loan repayment here. It's not showing up in my cash value. They're usually able to assist with that. Technically, it's there, it just hasn't reflected in the online dashboard. So that's something to be aware of. And but obviously with cash value insurance lines of credit, normally that's going to be like an instant pay. You make a payment on your line of credit, that's going to reflect immediately, right? So those are just some different comparisons between the two. Again, one's not necessarily better than another. It just depends on the situation, depends on the interest rate environment, depends on how much speed you're looking for as well. If you want instant, immediate access to your cash value at any time, you want the debit card, you want to write checks on it. Line of credits definitely might be better for you, even if the interest rate is a little bit higher. Maybe that speed and instant access that you get is worth the extra, however many basis points that you pay for that. You have to make that decision. So anyways, I'll go ahead and wrap up with that. To recap, with my Lafayette policy, I'm not going to be taking policy loans anymore. I'm going to be getting that entire policy loan paid off on November 8th when my private money deal is done. And then I'm going to be opening up that insurance line of credit. One other thing to be aware of with these insurance lines of credit is there is a minimum time frame to have that line of credit open. All right, so that's important to know. Again, every bank's going to be a little bit different, but there could be penalties for closing that line of credit and whatnot, if you do it too early. So just make sure you understand and know what you're getting yourself into. But for me, I'm not too worried about that. But yeah, I just wanted to share this with you guys because this is something that this is an update that I am making within my own policy and just my overall strategy of how I'm using the policy in my life. So if you guys have any questions, drop them down in the comment section below. And then make sure you check out all the links in the description for additional tools, training, and resources when it comes to whole life insurance, infinite banking, accelerating the wealth building process in general. And we'll go from there. All right. Hope you guys are crushing it. And I will talk to you in the next one. To your success. Matty Ice is out.